for questions. You made a persuasive case that since President Trump was sworn in, that economic growth is a cornerstone of his presidency, and you
Tonight's discussion dives into a long-running debate at the heart of U.S. economic policy. Who truly benefits from growth? Wall Street or Main Street? Lawmakers and regulators are revisiting the post-financial crisis rules that reshaped banking in America, arguing they may have stabilized the system at a cost to local communities. At stake here is whether regulatory reform can revive small banks, expand access to capital, and spread economic growth beyond major financial centers.
For questions. You made a persuasive case that since President Trump was sworn in, that economic growth is a cornerstone of his presidency, and you highlighted today, as you have in speeches over the year, the importance of that Wall Street's doing well, but it's Main Street's turn, and you'd like to see economic growth expanded into what I always quote from Steve Case, the rise of the rest, where we see that economic performance expand across the country. We share that commitment here on this committee about reversing elements of the regulatory framework that have sought, possibly certainly well-intentioned, the concept of too big to fail, but ended up in creating an environment over the past 15 years where community banks are too small to succeed, or maybe avoiding your term today you chose to use, the stability of the graveyard. The committee has worked together on a bipartisan basis to highlight some of the principal actions that we've considered over the past year. Our Main Street Capital Access Act, which we intend to bring to the House floor. We're grateful for your Undersecretary, Mr. McKernan, who last month joined us as we rolled out that package to talk about how we can collaborate. Would you take a minute and from your perspective, how do strong, well-capitalized community banks and the benefits of tailoring that are in this legislative proposal help accomplish faster economic growth and the rise of the rest?
Chairman Hill, as I've said, it's Main Street's turn, and essential for Main Street's having its turn are the small and community banks. And I would note that thanks to onerous regulation, and as you and I both say, community and small banks became too small to succeed. Tragically, more than 50% of our community banks have disappeared since the great financial crisis, not during, since. There have been virtually no de novo banks created, whereas before the GFC, there were more than 50 per year. And small and community banks not only are the anchor for community-based lending, but they provide the bulk of the lending for agriculture, for small real estate loans, and for small business loans. So
this moment highlights a critical tension in modern financial regulation. After the 2008 financial crisis, safeguards were designed to prevent systemic collapse, but critics argue those same rules unintentionally accelerated consolidation. The claim that more than half of community banks have disappeared reflects a broader trend. Fewer new banks are being created, while large institutions continue to grow. The question policymakers face is whether tailoring regulations can protect stability without stifling local lending. Do you think stricter oversight strengthened the economy or weakened Main Street's ability to compete?
Thriving community bank infrastructure and ecosystem is essential. I've met with more individually and in roundtables with more than 200 community bankers. I've spoken at conferences with more than 1,000, and tailoring is essential. I had one banker from my home state in South Carolina with assets of about $200 million tell me that under the previous regulatory regime, she was told that she should be more like Bank America, the second largest bank in the country. And so it is essential that we have the right tailoring, right risk levels, and right monitoring of these important institutions.
We thank you for your perspective on that, and to illustrate it in our work we've done on housing in the committee, also on a bipartisan basis, it was noted that banks under $10 billion in size, really the heart of our community banking system, several thousand banks across the country, they make 60% of our 1 to 4 family construction loans. And while banks of all sizes deliver amazing capital access in our economy, at the heart of our main streets, if we want more housing supply, we find that it's really that local grassroots, public or privately held community bank that helps lead that. You mentioned de novos, and under Chairman Barr's leadership in our subcommittee, and again, with bipartisan support, we've enhanced in the Main Street Capital Access Act ways we think that will speed up and make easier to get both deposit insurance, raise capital, and tell the story about having more dynamic de novo bank formations that, as you say, have been so slowed by the last 15 years. Turning to digital assets, something that we've talked about quite a bit in the time remaining, can you tell me your assessment of how the regulatory process is coming for the implementation of the GENIUS Act?
The GENIUS Act was an important piece of legislation for bringing back into the U.S. the regulation, creation of digital assets, and making the United States a national champion. The GENIUS Act and the stable coins that will be created with that could, in fact, be an important feature of financing the U.S. government. And we are moving with deliberate speed to round out the House and the Senate's intention on that important,
Thank you very much, Mr. Secretary.
piece of legislation.
Appreciate your work and leadership there. I now recognize the ranking member of our committee, Mrs. Waters of California, for 5 minutes for questions.
Thank you very much.
Taken together, this exchange reveals how economic growth, banking regulation, housing supply, and even digital assets are increasingly interconnected. Supporters see community banks as engines of local development, while emerging legislation like the GENIUS Act signals a push to keep financial innovation anchored in the U.S. But the broader debate remains unresolved. How do lawmakers balance innovation, access, and stability without repeating past mistakes? What's your take? Is this a necessary recalibration or a risky rollback? Share your thoughts below, and don't forget to like, subscribe, and share for more clear, fact-based analysis on the policies shaping our economy.